Hello friends and welcome to Jateen Trivedi's Commodity Currency Outlook. So for this week in Diwali special edition, I would like to give you some highlights about how the gold prices have outperformed in the last couple of years that we have seen. So specifically speaking about the last 1 year, from 2019 Diwali to 2020 Diwali, we have seen a strong upside of gold prices from the levels of around 38,000 to 50,000, and we have also touched the levels of around 55,000 in between this Diwali period. So we have seen almost 17 to 18,000 points rally in the last 1 year itself, from Diwali 2019 to between 2020 Diwali. So this has been a very strong and stellar rally in gold prices compared to any year which we see in the recent past. From 2012 to 2018 we have seen a very laggard and a very sideways trend in gold prices. In the last couple of years, from 2018, from when US and China issues started erupting, and we saw trade war situation happening, COVID-19 coming along, and gold prices even escalating further due to all these negative scenarios. So going ahead now, the recoveries are happening. US, Europe, China, mainly China has shown some good numbers. Manufacturing numbers, data have coming are coming very strongly on the positive note, and also Indian economy is also strongly reviving. So these will be kind of an opportunities in between which the gold prices will show on the downside opportunities. So from the levels of around 50,000 to 44,000 odd zone, that is the 5-6,000 point zone, which is going to be a very strong basing support zone going ahead. So it might not give you the same stellar rally which it has given in the last 1 year from 38 to 55. This might be a very a mountain sloping kind of a rally where we will see some rise and then again we will see some corrections happening in gold prices. But at the end, the broad view remains the same. That is the bullish stance in gold prices. With the target, we should be aiming at around 60 to 65,000 odd levels for next year Diwali, that is 2021 Diwali. So how we should be approaching, that is the important thing, that from the levels of around 50,000 right now, we should be accumulating it and not going it at one go in buying gold when we look at it as an investment opportunity. So one can start accumulating and keep on adding in small quantities till the levels of around 45,000 odd zone, because I don't see gold prices falling below 44,000 as of now. And going ahead, the economies are reviving, so we will have some strong inflows, fund inflows going into the riskier assets, that is the currencies and also the equities, which will see some strong inflows happening, as we have already seen in the last couple of months. The eurozone, the US and the Indian markets are performing quite strongly due to lesser impact of the COVID-19 on the fatality rates, and everything are improving. So now what will happen is that gold is going to give you opportunities in between. It won't be a situation where you will miss out on the opportunities like we have seen in the last 1 year, that if the prices have shooted, then it does not come back at those levels. But this might not be the same thing this year. We will have strong opportunities as well. So for as far as this year is concerned, gold prices will give you opportunities. So one should be looking at dips on buying opportunities and avoid buying it on breakouts. Whenever there is breakouts, do not jump onto the prices to buy. So for next year, next 1 year, one should be keeping the strategy of buying it on dips. So that is about it from the bullion prices. Now coming on to the energy pack. So for next week, energy pack looks a little bit volatile, including crude and NG. NG prices are going to be volatile, so do not try to trade this energy pack right now. Let the prices settle, especially the natural gas prices. Crude prices are giving some opportunities on the higher side. The base formation has been formed at the levels of around 2900 to 3000 odd levels. There is some base formation happening, so one can go long for the targets of around 3200 for this week in crude prices. Now the last segment, that is the base metal, one can go long in copper, zinc and even MCX base metal dex. So all these three components in base metal are looking quite supportive going ahead. The levels which are important for base metal and the copper and zinc prices are around at the levels of around 208 to 205 for zinc. For copper it is around 530 to 535 odd zones, and on the on the higher side, copper will have some resistance at the levels of around 555 to 560 for this week. And on the zinc front, we might see some strong resistance happening at the levels of around 212 to 215. So this is about it from me, guys, for this week, and a special investment call which I have given on gold for this week, for the coming 1 year. Hope you have a very sound and safe Diwali this year also, and stay home, stay safe, and a very happy Diwali and a very prosperous new year to all of you.